Hello, everybody, and welcome to the X Factor with the Crypto Hipster. This is the Crypto Hipster, Jamil Hassan, where I bring you weekly. I bring you crypto news, insights, analysis, and commentary, especially commentary around the world of crypto and blockchain. And this is episode 53, 1 year plus 1 week. Season 3, episode 13 for the week ending August 18, 2023, and beginning of August 14, 2023. So I do Monday through Friday. I should really do a weekend wrap up. I don't do that yet, but I can. And I may during season 4. We got 7 more after today, which is 8 more. 7 more after today episodes of season 3. And we are in the middle of it. And man, I'll tell you, we had a pullback yesterday. We had a crypto pullback. We had things were free falling yesterday for a little bit, and it might be more free falling. And I can't tell you, I'm not a predictor of prices. People ask me, what's the price going to be of XRP in 30 years? And I'm like, maybe $100. I don't know, maybe $1 million. I have no idea. I'm not a Swami. If you want to know who a good Swami is, like a skill set is not being able to predict crypto's future. A good skill set is being able to seek out somebody who can predict, certain things. And there was a Swami I met in 2004 on Koh San Road in Bangkok while I was backpacking there. That guy was legit. That guy was the only Swami I ever met that was legit. But this is not a Swami show. This show is about crypto and blockchain, So let's go. And I started a little bit of rapping. Hopefully people listening to me aren't snapping. And I'll stop because I'm not that funny. All right. Let's go. Coinbase. Coinbase has won the NFL. No, what? NFA. Not the NFL. The NFL's football. They haven't won football, but they have won NFA approval. These new glasses I got. The NFA approval to offer Bitcoin and Ether futures in the United States. All right, so let's go. Cryptocurrency exchange Coinbase has obtained approval from the National Futures Association to offer investments in crypto futures to eligible customers in the U.S. Wednesday, Coinbase said that the company is now officially allowed to operate a futures commission merchant platform, FCM platform. The approval enables Coinbase to introduce Bitcoin and Ether futures contracts through its Commodity Futures Trading Commission regulated derivatives exchange. This is a critical milestone that reaffirms Coinbase's commitment to operate a regulated and compliant business and be the most trusted and secure crypto native platform for their customers, Coinbase said. According to a notice on their webpage, the new futures trading service will not be immediately available in the U.S. Okay. U.S. regulated futures trading is coming soon, it says. Sign up to join the waitlist and get early access. I might just do that. In the announcement, Coinbase claimed that the global crypto derivatives market accounts for 75% of crypto trading volume worldwide. The ability to trade using margin gives customers leverage and access to the crypto market with less upfront investment than traditional spot trading. For those who don't know, I wrote a book recently on 100x marks the OG spot, where I interviewed some people regarding 100x leverage, which is a lot. It's too much. Some people think it's too much. Some people think it's not enough. What's that leverage going to be? And maybe people should read that book of mine before they put money in futures contracts if they don't know too much about the futures market. There's a good explainer in there, and it's the first chapter. And it's with Mr. Tokas, who is from India, on a leverage platform there, which is a really popular one. So it's a good way to think about it. So, Federal Reserve. We're staying in the U.S. The first article was the U.S., of course. Second article is the U.S. Federal Reserve issues enforcement action against FTX-linked U.S. bank, Moonstone Bank. Not to be confused with Cher's Moonstruck movie, but Moonstone Bank, which renamed itself Farmington State Bank, received roughly $11.5 million from FTX's sister firm Alameda Research through its holding company in 2022. The Federal Reserve Board of the U.S. and Washington State Department of Financial Institutions, which is where that Farmington State Bank is, have announced an enforcement action against the bank, a financial institution whose parent company, which I just said, got over $11 million from Alameda. In yesterday's announcement, Thursday, the Fed said the enforcement action was related to Farmington improperly changing its business plan in 2022 without proper notification and approval. See, in the regulated spaces like banking, you have to get approval. You can't just like change what you're doing. You know, you got to be able to go through the rules. There's rules here. That's what they're saying. That's what they're saying. I would tend to agree. The bank did not inform the Fed it intended to pursue a strategy focused on digital banking services or digital assets. Formerly named Moonstone, Farmington received, I'm not going to say it again, $11.5 million. I just said it. Oh, well. From Alameda. Okay. How many times I got to say that? It sounds good. Alameda. Jalameda. So that's where Sam Bankman-Fried is. The board's action ensures the bank's operations will wind down in a manner that protects the bank's depositors and the deposit insurance fund, said the Fed. The action also prohibits Farmington and FBH from making dividends or capital distributions, dissipating cash assets, and engaging in certain activities without approval from its supervisors. Let me know your thoughts. Let me know your thoughts on the futures. Let me know your thoughts on the articles we heard about today in the USA. And we only have one more. Okay. And it's a goodie. U.S. lawmakers press the SEC and FINRA on Prometheum's broker-dealer approval. Okay. The United States lawmakers on the House Financial Services Committee have demanded answers from the heads of the Securities and Exchange Commission and Financial Industry Regulatory Authority, FINRA, regarding how Prometheum obtained a special purpose broker-dealer SPBD license. Corruption. Excuse me, I had a little tickle in my throat. 1 second. Corruption. Sorry, I'm back. In separate letters dated August 9, House Committee Chair Patrick McHenry and 20 other members wrote to the SEC Chair Gary Gensler, and FINRA President and CEO Robert Cook. The lawmakers questioned the timing and circumstances of FINRA approving Prometheum's SPBD license as they were continuing to consider legislative solutions to regulatory gaps on digital assets. While Prometheum claims it is the silver bullet, what's something else? We're going to get into that real soon. For regulated digital asset offerings, it has not yet served a single customer. Why would they? We'll get into that too. Claim the lawmakers. It isn't clear why FINRA would have chosen to approve a firm with no operating history and no track record. No history and no track record. It's abundant. Of serving customers all over the applications that it had received. So, let's talk about this. I was at a conference back in 2 months ago. This is the day that all that stuff came down from Canada and the sky, and stank really bad outside in a burning whatever. I was at a conference, and on the panel was this guy from Prometheum. He was the CEO. He was there and was talking about how he got approval, and very convoluted and complex, and it took him 5 years. So I believe that he went through a process. I believe they went through a process. I don't disagree with that. What do I disagree with? Oh yeah, I was like, who is this guy? You know, and people say that it was a Trojan horse. I don't think Trojan horse. I think maybe My Little Pony at best, but or Munchie, oh soft and cuddly, but it wasn't cuddly, guy had greasy hair. So I'm thinking maybe like let your soul glow, but that it wasn't soul glow. It was something else. But regardless, they did a lot of work. So I'm not saying anything wrong here. I'm saying, the guy just, reminded me of this movie that I saw in the 1980s called Used Cars with Kurt Russell. And in used cars, about this car dealership that was supposed to be a comedy. It was kind of good. I remember I watched it like 1882 or something. And they said that come down to our lot and check out our mile of cars. And they said style, but their competitor on the television ad said made it say mile. So this car dealership with Kurt Russell, all the shysters, all the Schusters, all the swindlers, his friends had to bring a mile of cars to the parking lot so that there was a mile of cars there. And that's what the movie is all about. And this guy reminds me of that movie. I don't know. I don't really deal with used car salesmen. I buy a Volvo, I lease a Volvo every few years. So I don't know, but there was like a kind of reminder. So I'm just saying, I don't know, what's going on here. And the government is saying, I don't know what's going on here. How did these guys get this approval? And if you watch the questions that they were asked in front of Congress, we still ask, how did this guy get the approval? I don't know. And it's not my place to make a determination. But if you let your soul glow and if you watch used cars, then maybe, just maybe, you might know. We're moving on. All right. Let's get out of here. Let's go to Canada. Okay. Where they have used trucks. No, they have truckers, but this is not about the truckers. Okay. So strict Canadian crypto exchange rules allowed Kraken to clarify to invest there. Wow. Okay. Size and Energy allowed Kraken to stay in Canada after the imposition of new registration requirements for crypto exchanges in February. But in spite of the demanding process, the regulatory clarity has benefited the company. Kraken Managing Director for Canada, Mark Greenberg, said. Speaking to Cointelegraph's Sam Borgi at the Blockchain Futurist Conference in Toronto, Greenberg had positive things to say about the Canadian regulatory environment. The Canadian regulators have been collaborative, helpful. There's a clear regulatory pathway. It's allowed us to invest in the country. Kraken has a staff of over 250 people in Canada. A strong base has been key to the company's success in the country. After the registration rules for crypto exchanges were tightened in Canada in February by the Canadian Service Administrators, requiring them to register as restricted dealers, some exchanges such as OKX left the country, but Kraken is not. Kraken is there. Kraken is cracking it up. What's going on? Come on, now it's going on. I say that, Anyway, let me know your thoughts. Let's get out of here. We have more Americas to talk about. We have South America. Okay. So Colombia Central Bank recommends limiting CBDC holdings and spending. The Central Bank of Colombia has not yet decided whether or not to issue a central bank digital currency, but it believes that setting limits on CBDC and transactions could bring about a number of benefits. In its latest CBD study entitled Expected Macroeconomic Effects of Issuing a Retail CBDC, Colombia's Banco de la República concluded that the potential introduction of a retail CBDC doesn't pose any significant macroeconomic risks. In order to mitigate any potential threats associated with a CBDC, Colombia's central bank recommends setting holding and spending limits for the digital currency. According to the regulator, such a CBDC design would increase the security of funds as CBDC holdings limits could safeguard users from cyber attacks targeting those balances of transactions. Setting limits on retail CBDC holdings could also allow regulators to deal with the trade-off between privacy and transparency by offering diverse tiers of limits. Okay. Let me know your thoughts. How's that going to go? And we're going to go to Argentina. Okay. Argentina, Bitcoin soars up, moons up. Well, yesterday it did. Yesterday it crashed like a giant tidal wave hitting from the tsunami. But hey, it happens. And by the way, after it crashed, BlackRock bought like 2,000 or 5,000 Bitcoin. They were waiting for it. That goes back to why I was going to talk about the used cars guy. In the news, It used to be in 1980 in the U.S. that if you told a lie in the media, you were accountable and responsible for that information. Okay, now there's articles that are written in the Slack room that are put out by CNN, New York Times, a lot of other publications that are not truthful, and they cause they cause market manipulation. And when the market manipulation happens, prices decrease. I'm not saying that yesterday's China real estate company going bankrupt was not a primary driver, but when you tell misnomers in the market, it's called market manipulation, and that needs to be investigated. Gary Gensler. Okay, now Argentina. Okay, I digress, right? That's why I brought it up. So I just want to clarify that. Bitcoin soars in Argentina as Javier Milei wins presidential primary. Okay, the price of Bitcoin has jumped to fresh highs in Argentina since the news that Bitcoin-friendly presidential candidate Javier Milei won a primary election on August 13th, with one BTC reaching a value of 10 million Argentine pesos, according to data from the CoinGecko app. If you don't have CoinGecko app, here's a plug. Get it. It's very good. It keeps you updated on the prices. The prices crash, you can look at it. Say, oh my God, what's happening here? In Argentina, Bitcoin has seen a sharp climb this past week, with BTC rallying 21% from 8.4 million Argentino pesos to 10.2 million Argentino pesos in less than 1 hour Monday. While the 10 million pesos mark is widely seen as the official Bitcoin value, the Argentine parallel market, sometimes referred to as the real value market, is even higher than that. According to local cryptocurrency data source CoinMonitor in Argentina, not Minotaur, CoinMonitor, not CoinMinotaur. Oh, that's a pretty cool name for a project. The price of Bitcoin surged to a high as 20.3 million ARS per coin on August 16, which is Wednesday, 2 days ago. Oh, yeah. It spiked up, but it spiked down yesterday. But let me know your thoughts. What's the good news on this Javier guy? Okay. And why do people like him? And you see kind of the similarity now in Argentina to El Salvador. And why is Bitcoin excellent for corrupt governments and to restore wealth to humanity? Let me know your thoughts. Okay, let's go across the pond to the United Kingdom. UK crypto businesses to comply with FATF travel rule beginning in September. Crypto asset businesses in the United Kingdom will be required to comply with the with the Financial Action Task Force. We should have a Bitcoin Action Task Force, by the way, but we don't. In the UK, it's Financial Action Task Force, anti-money laundering, and counter-terrorist financing rules, collectively known as the Travel Rule, beginning September 1st, not next Friday, the following Friday. A statement from FCA reiterated yesterday. This will bring UK into conformity with FATF. I call it FATF because it's easier for me to call it FATF. Makes me think of the BIS guy who likes to eat sandwiches. Standard 2019, the travel rule requires virtual asset service providers to share customer information when making transfers to help identify suspicious transactions. The UK passed legislation to begin enforcing the travel rule in July 2022. UK crypto businesses will be expected to implement the travel rule fully by September 1 when sending or receiving crypto assets in the UK or jurisdictions that have already implemented the rule. Businesses will be responsible for compliance when using third-party vendors as well. How's that going to go for my UK friends who listen to my podcast? How's that going to go? Let me know. It's not slow go cardio, but let's stay in the UK and talk about PayPal. PayPal UK is to halt Bitcoin purchases until early 2024. Cryptocurrency-friendly payments platform PayPal is making some crypto adjustments on its platform in the UK to comply with local financial regulations. PayPal is temporarily pausing the ability for its UK customers to buy cryptocurrencies like Bitcoin as it works to comply with new regulations, the firm said. PayPal customers who currently hold crypto can keep it on their platform at no charge and are also able to sell their currency at any time. PayPal UK says. In an email to selected UK customers, PayPal said it would temporarily halt crypto purchases in the UK starting from October 1, 2023. We expect to re-enable purchases in early 2024, they say. Okay. How's it going to go? What are your thoughts on that? Let's go to Asia. Okay. Hong Kong's crypto stance. Executives are weighing in on the Web3 in the region. Chinese Special Administrative Region of Hong Kong is aiming to become a leading crypto hub as the region started to promote the development of Web3. At the same time, its securities regulator has begun to actively regulate the crypto space, awarding licenses for retail crypto trading. Thank God, kudos to you. Good job. On June 30th, the Hong Kong government announced that it would establish a task force that would be in charge of ethically promoting the development of Web3 in the region. I love that word, ethics. Bitcoin, actually, blockchain ethics. I wonder who coined that phrase. Oh, wait, it was me in March 2018. 1.5 years before MIT and Gary Gensler said they did. But I digress again. The team in Hong Kong will include 11 key government officials and 15 industry participants. In the following months, Hong Kong Securities and Futures Commission stated awarding license to exchanges in line with this crypto licensing regime that was established to protect investors from events like the FTX collapse and other events regarding FTX where Sam Bankman-Fried is in prison. Animoca Brands co-founder and executive chairman Yat Siu, who was appointed in Hong Kong's Web3 task force in July, said, what did he say? Speaking from my personal perspectives, we anticipate robust support for Web3 initiatives from both the Hong Kong government and the local community, including organizations like ours. Beautiful, 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 beautiful. Let me know your thoughts. And is it beautiful? Beautiful people. Oh, yeah. Yeah. Let's go to the Philippines. Well, this headlines, to me, it doesn't look like it's beautiful. What's going on? Axie Infinity's play to earn scheme alarms Philippine National Police. Why are you calling it a scheme? It's not a scheme. You got teenagers making millions a year. How can it be a scheme? Philippine National Police anti-cybercrime group PNP ACG scrutinized some of the models used by cryptocurrency games, warning Filipino citizens against the various schemes used to extort money from the gaming community. While warning against the risks of cryptocurrency gaming schemes, the Philippine police highlighted the play-to-earn model used by Axie Infinity, a Pokemon-inspired play-to-earn metaverse game created on the Ethereum blockchain. A player needs to purchase at least 3 Axie characters to start playing the game, which the PNP ACG believes forces users to shell out $300 before they can start earning. On the other hand, the police department sided with traditional gaming industry, which averages up to $100 per user. So let's take a break right here. Let's go to our CoinGecko app, okay, and let's look up the price of Axie Infinity, okay? So what it has on this lovely app is it has the top 100, and you go down the list, and let's see, where is it at? I don't even see it. Oh, there it is. It's $4.87. Okay, so the price of Axie Infinity is $4.87. So if you buy 3 characters, that is like 487 times 3 is like $14.61. Yeah, I don't know how you get $300, but and you add things up somehow. Like, oh yeah. Playing crypto games can be riskier than investing in cryptocurrencies, according to the PNP ACG, considering the ease at which games can lose their digital tokens and non-fungible tokens, NFTs. Okay. Wow. I'm just concerned that, $14.67 is far cry for $300. From sending tokens to an unsupported wallet address to market volatility and online scammers, the crypto gaming community is under constant threat of losing their investments. The warning says just because a game's underlying blockchain is secure does not mean its engine or marketplace is secure. Well, that's true, because the way to hack is not, you can't hack the blockchain, you hack the entryways, which is the wallets and the marketplaces. That's true. But let me know your thoughts on how that's going to go for them when they can't add. All right, Singapore Central Bank says 3 business days is timely transfer for stable coins. Well, that sure beats a wire where you're waiting for weeks. Let's see. While blockchains continue to revolutionize payments by allowing instant transfers, Singapore Central Bank believes 3 business days is a timely transfer for a single currency stablecoin, similar to transfer speed requirements for domestic money transfers. I think it's pretty neat that, in Singapore, money transfers only take 3 days instead of many days. But hey, blockchain's pretty instantaneous. So what are they talking about? Unless they're building something that's not. They're sacrificing on speed, and they are increasing, and they're putting more emphasis on security and scalability. How's that going to go? I don't know. Usually payments, you want speed. But hey, on August 15, the Monetary Authority of Singapore released its regulatory framework for stablecoins in the city-state. In the newly published guidelines, the financial regulator highlighted that it would consider 3 business days as a timely transfer, calling it a short time frame. Do you think it's short? People in crypto who send payments automatically within seconds. Is 3 days too long? According to MAS, while SCS transfers may be expected to be completed more quickly because they are done on a blockchain, transfers of MAS-regulated stablecoins may occur on various types of blockchain infrastructure that may have different service standards. Show me a slow blockchain. I mean, not one that gets shut down all the time or goes down left and right, but show me a really we're definitely not talking about Bitcoin, Litecoin, Hedera, Hashgraph here. The central bank wrote that these types of blockchains infrastructures may not always be under control of intermediaries. Well, no, duh. We don't want them under control of intermediaries. We don't want them under. Yeah, why would you want? Yeah, let's get out of here. Let's go to the Middle East, where things hopefully make a little bit more sense. 3AC. Okay, 3AC founders fined by Dubai regulator over OPNX exchange. The founders of the collapsed digital asset hedge fund 3 Arrows Capital, Kyle Davies and Su Zhu, are now facing a fine issued by Dubai's dedicated crypto regulator over the OPNX exchange. Wednesday, Dubai's Virtual Asset Regulatory Authority, VARA, published a notice of fines for the OPNX exchange. The regulator said that it has issued a fine of 10 million United Arab Emirates dirhams, around 2.7 million US dollars, for violations of its market regulations, and noted that the fine remains unpaid. Apart from the exchange, VARA also announced that it has issued a fine of 200,000 AED, around $54,000, to executives of OPNX, including Davies, Zhu, Mark Lamb, and its CEO, Leslie Lamb. The fine issued was for violations of the marketing, advertising, and promotions laws of Dubai. That's a no-no. According to the regulator, the individuals mentioned have already paid their dues. Okay, how's this fine going to go? We're setting any precedents here? What are your thoughts? Let me know. And then we go Abu Dhabi. Abu Dhabi grants virtual asset firm M2 permission to offer crypto services. The Financial Services Regulatory Authority, FSRA, of the Abu Dhabi Global Market, ADGM, has granted financial services permission to virtual asset firm M2 to operate a multilateral trading facility from the United Arab Emirates capital. In an announcement on Wednesday, the Abu Dhabi headquartered M2 said the regulatory approval would allow institutional and retail clients in the UAE to buy, sell, and custody virtual assets such as Bitcoin. The M2 platform, which is scheduled to launch later this year, has been developed over the past year with a long-term vision to establish the highest levels of trust, security, and integrity in the emerging virtual asset class. Once live, the M2 platform will allow UAE users to buy crypto using fiat and other things. All right. How's that going to go? It's good news, right? That's good news over in Dubai. I wish we had good news in the US, but we have market manipulation and BlackRock buying stuff left and right. All right. So we're going to go to Stan. Actually, Uzbekistan. Stans have not been a happy place over the years. Maybe they'll start being happier. Um, Capital Bank and Ravnak Bank got approval from the National Agency for Prospective Projects to participate in the digital sandbox of crypto regulation. There are two private banks, and they acquired approval from the National Agency for Prospective Projects, NAP, not as in taking a nap, although that would be nice after the show that I could take a nap, but I can't. To participate in the digital sandbox of crypto regulation. Yes, as an entrepreneur, as a founder, I can't take a nap during the day, but maybe someday I will be able to. The banks. Now it's back to the banks. The banks will issue plastic crypto cards powered by MasterCard. So MasterCard has gone into Uzbekistan. Interesting. MasterCard, who in the US bashes, trashes crypto, yet invests in Uzbekistan while they think they're not being looked at and seen. I see you, MasterCard. Yeah, I do. According to the release, the Uzbeki crypto card will be called Uznex, which will integrate a bank account with access to a crypto exchange and automated exchange mechanism. The card will be supported by one of the world's leading payment systems, MasterCard. The current deadline for financial customer rollouts from both banks and crypto cards is the end of December. Capital Bank and Ravnak remain two of the three registered participants in the National Digital Sandbox. Is that good news? Who's the good news for? Is it good news for the private banks, or is it good news for MasterCard? Let me know your thoughts. Okay. And we got one more to go, and we're going to go down under. We're going to go under the down. We're going to go to Australia. Crypto firm Helio Lending gets bond sentence over false license claim. Melbourne-based crypto lender Hello Lending has previously pleaded guilty to falsely claiming it had an Australian credit license. What a day! Australia-based crypto lender Hello Lending has been sentenced to a non-conviction good behavior bond for a year for falsely claiming it had a local credit license. Yesterday, the Australian Securities and Investment Commission said Hello was sentenced to a non-conviction bond of 15,000 Australian dollars on condition of good behavior for a year. Good behavior bonds are often granted for less serious offenses, which is $9,600 in US dollars terms. A non-conviction of good behavior bond means Helios will only be convicted if it breaks its bond. The Australian $15,000 potential penalty is a significantly lighter sentence than the maximum $160,000 penalty it faced. They got off a little bit leniently, but they still got to pay it. So let's see. They falsely said they had a credit license in August 2019, and they didn't. So let me know your thoughts. Did they did they catch a break? Let me know. And maybe if you catch a break, you get to go play with a kangaroo. I don't know. Maybe we'll see. And that was it for me today. And that was it for the X Factor with the Crypto Hipster. This has been episode number 53. Next week, we'll see you for episode 54. We keep going block after block. Not block. That's Bitcoin. Bitcoin is block after block after block after block. The X Factor is week after week after week after week. We'll see you next week. Have a great weekend. Have a great week. Thank you for tuning in.